Welcome, ladies and gentlemen, to Commodity TV in a new online edition of our online interview series. We want to get an update after the quarterly numbers from Fortuna Mining, and Jorge Ganoza is here with us, the CEO. Hey, how are you?
Pleased to be in your program again.
Yeah, thank you very much for taking the time, as I know you are traveling, I think, in the States, but great that you've taken the time. First of all, after your record year last year, it looks like Q1, moves also forward. How was Q1 for you?
We built on the results of the fourth quarter, and to focus on what matters the most is free cash flow.
Uh-huh.
In the fourth quarter, we generated record free cash flow at the time of close to $96 million.
Mhm.
And in this first quarter of the year, or record free cash flow, record on record, uh, of $111 million.
Mhm.
What does that mean? That means that we have our free cash flow margin in Q1 has been 38%. That's free cash flow over sales of $290 million. 38%. Or margin, free cash flow margin, the previous quarter was 31%,
Mhm.
right? So we gone from 31 to 38%. I know some guys, some investors don't pay attention to EBITDA. We do. And we look at our EBITDA margin, and our EBITDA margin is in excess of 50%. We're running the business with an EBITDA margin in excess of 50%. Our free cash flow margin is running at 38%. And all of these are incremental figures. We sold gold in the first quarter of the year at an average price of $2,880.
Nice.
That's 8% higher than the previous quarter.
Yes.
And today, as we are speaking, gold has seen a small correction. Everybody's in crisis because gold went from 3,300 to 32. You know, it's still an excellent price, but substantially higher than
Mhm.
what we achieved in the previous quarter, right?
Mhm.
So, from our perspective, we are looking forward to a strong year, and we're building on the year quarter after quarter,
Mhm.
showing these results. We came in with very strong earnings,
Mhm.
$62 million in earnings, 20 cents per share, So all in all, very good figures. Fortuna has never been as strong as it is today.
Yeah.
Yeah. I don't know if you have any questions.
Oh, absolutely. I mean, we saw a production of 103,000 and almost 500 ounces in Q1, which I think is in the plan because you have sold San Jose and Yaramoco. So what is the future game plan with, let's say, new mines? I mean, the M&A carousel, I would call it, is really turning fast with Rosbiti in the driver's seat, as we saw with Pan American Silver, as we saw Caliber, also with Equinox and things like this. So do you want to participate in the M&A carousel, or do you think maybe no, we want to fast track the Ambasud and move that forward into production?
It's interesting because we've been very active on M&A before it was fashionable, right? So right now, everybody, gold and silver have attention, and everybody's looking at the M&A.
Yes.
We were doing M&A 3, 4 years ago when it wasn't fashionable. And you know what? That is the time where you have to be doing M&A, right? That is the
Mhm.
time. You
Mhm.
have to be counter-cyclical
Mhm.
rather than chasing ounces at higher prices. So we've been disciplined, and we did our acquisitions, 3 years ago, about 3.5 years ago. We have done two acquisitions.
Mhm.
Of course, the Roxgold acquisition, and then the Chesser acquisition that takes us into Senegal. And
Mhm.
we're still open to do more. But my message is, hey, listen, yes, there is hype right now, and everybody's paying attention. And when I speak with industry media, and just I'm in New York, so I was speaking with with Bloomberg and other channels and Reuters, and they're all asking about M&A. And I'm like, yes, it's interesting because we were doing M&A 3 years ago, 2 years ago.
That's right.
You just didn't care to listen then,
Yeah.
right?
Mhm.
But that is what allows us to be in a very strong position. So before I engage in the discussion of M&A, to address your question, let me point something out. Because we did our acquisitions 3 years ago, today, let's talk for a second about our balance sheet.
Mhm.
Today, we have a net cash position of close to 140 million. That means if we service all of our debt, we are cash positive 140 million. We have liquidity available to Fortuna
Mhm.
of $460 million.
Mhm.
We have cash in the bank of $300 million.
Mhm.
So we have a treasury that allows us to pursue aggressively M&A if we identify the value opportunities we're looking for. We can return to shareholders, or we can navigate comfortably market shifts, right?
Yeah.
We all expect gold will continue to go higher and silver will, but we don't know.
Mhm.
And if there are market shifts, Fortuna is in a very strong position to navigate that, right? So those three things is that things that are important. We have one of the strongest balance sheets in our peer group, and we're using it. We returned to shareholders $34 million over the last 6 months,
Mhm.
right?
Mhm.
We're investing heavily in exploration, $51 million this year. That is a budget that's $10 million higher than what we invested last year. And we're looking at M&A opportunities. So to get to M&A or
Mhm.
growth, more M&A is an avenue for growth. What
Mhm.
are we doing on growth? First, we have within our portfolio two key opportunities. One is the expansion of the Séguéla mine, which is already on course.
Mhm.
That mine is going from producing about 140,000 ounces of gold annually to about 180,000 ounces of gold annually. That is the cheapest growth we can give to our shareholders, and that is our lowest cost mine.
Mhm.
So that is one, you know. The
Mhm.
second one is Diamba Sud. Diamba Sud, we're investing heavily. We are working to transition from an exploration permit to an exploitation permit by mid 2026.
Mhm.
And with that, we clear the way for a construction decision, a development decision, which should follow. But we're currently doing three things in parallel at Diamba Sud: exploration, environmental studies, and engineering studies, with the aim that by mid next year, we transition from exploration to exploitation in the permit, and that opens the way for a construction decision.
Mhm.
So, and to round the conversation on business development, we're streamlining our asset portfolio.
Mhm.
We have clearly said, Jochen, that our aim is not to be a million ounce producer now. Our aim is to consolidate Fortuna as a 500,000 ounce producer with certain features. Which are those? 500,000 ounce producer with a competitive cost, which means you can operate at the middle of the cost curve for all-in sustaining costs. And three, with assets where we can project a decade in the life of mine, decade in mineral reserves, right? So those three features are very important, and that's what we're working to put in our portfolio.
Mhm.
The San Jose mine became, after being a great asset and a cash cow in our portfolio, the mine aged, and that is mining. Resources get depleted. So the mine aged, became a high cost producer working on a very short resource reserve life.
Mhm.
So it didn't fit the portfolio.
Mhm.
We divested.
Mhm.
Second, Yaramoko, even though it is a high margin mine today, We stopped exploring in Burkina Faso this year. We have zero in investment in mineral exploration in Burkina Faso.
Mhm.
And the mine is going to exhaust its reserves by early 2026, mid 2026,
Mhm.
the first half.
Yeah.
So we were presented with a compelling offer,
Mhm.
$70 million up front, plus the ability to cash out close to $60 million in dividends out of the country.
Mhm.
So we're getting a liquidity injection of about $130 million out of a country that's currently very challenging
Mhm.
on the business climate.
Yeah, absolutely. No, I think also this makes absolutely sense. So the question is now, coming back to that M&A thing, I would call it. Could you imagine to say, you know what, we know Africa very well, maybe we want to stay in the continent, or could you also imagine that you say, maybe we go back a little bit more to South America, things like this? We know that also well. Is that something you would consider, or would you just say, hey, we are open for business when it makes sense?
We are fully committed to the LATAM region and the West African region. Fully committed.
Mm,
We're not sometimes people refer to us, Joachim, as a global mining company, and I
mm,
correct them. We're not a global mining company.
mm,
We're a regional mining company. We stay focused in these two regions, West Africa and Latin America.
mhm, yeah,
Just to help your audience, because I say this repeatedly, perhaps I said it in your program before. If we look at the geography of the West gold producing regions of West Africa,
mm,
that surface, that surface is the size of France and Belgium put together.
yes.
It's not very big. No, that's it. The gold produce all of the West African gold
Yeah,
production
mm,
comes from a regions that if we pile them and we erase those political borderlines and we just draw where gold is produced, it comes from an areas that are adjacent in a way, englobed in an area that's the size of France and Belgium, right, together. So it's not very big. And then in Latin America, it's just throughout the Cordillera. So when we actively pursue opportunities in both regions, and when we identify opportunities, we rank them on merit. We don't say, "Hey, listen, I want to be more weighted towards Africa or more weighted to that." No, the project needs to stand on its own, and we will invest in the projects that provide the better returns, the best value for our shareholders. If it's in West Africa or if it's in Latin America, I am a bit agnostic. Now, within Latin America, we will not invest in Venezuela. We will not invest in Bolivia. In West Africa, we will not invest in Mali. We will not invest in Burkina Faso. We're divesting out of Burkina Faso, you know. So we will manage that, but more tactically than strategic. Strategically, we like the two regions. Tactically, we will allocate capital depending on how we understand the jurisdictional risk in each country at every given time.
mhm. Okay, super. I also saw that your all-in sustaining costs were going down to $1,640 in Q1. Where do you see the trend for this year? And do you what is your guiding for this year for the AIC on the remaining ones?
That's a very good point because our cost coming down in 2020, in Q1 2025 and onwards, is also a function of dropping our highest cost mine, which is San Jose. And before I get out of the divestiture of Yaramoko and San Jose, let me point more thing. With every mine closure, there is capital
Mhm,
and there is management attention.
mhm,
You need to manage those projects. So by divesting these two assets, we're being able to reallocate. We're not only getting a liquidity injection of $130 million, but we're also able to reallocate about $50 million that otherwise we would have to put or
Mm,
place back into the mines towards mine closure.
mm,
Plus, those are multi-year projects
mm.
that you need to manage and manage well
Absolutely.
throughout, 5, 6 year periods, because you close the mine in 2 years and then you need to monitor, no? So by doing this with the right counterparties, of course,
Mhm,
we are able to have clean exits and leave the hands, I believe, in competent hands to continue, probably with a different cost structure at a different production rate that does not necessarily add value to Fortuna. So, you know, uh, those are two important considerations: or reallocation of capital and management uh, uh, time, right?
absolutely. Um, Also a question, let's say on the replacement rate of your production, because you said you invest this year $51 million in exploration, which is an amazing amount. How is the replacement rate so far, 2024, and also the planned one, 2025, for the production you have done?
No, in 2024, we, we saw a bit of shrinkage on reserves, but that is had to do more with the timing of resource to reserve conversion.
Mhm,
So if you look at our reserves plus resources, the numbers stayed strong, right? The numbers stayed strong. We were able to balance depletion.
mhm,
Right? So I'm comfortable.
mhm,
We have slightly below 3 million ounces in mineral reserves in total inventory.
mhm.
Uh, so, no, our mineral reserve stands at what, 2.7, and we have another similar amount in resources. So, I think for the level of production we have, that's, comfortable with the assets that we have, with the three mines, right?
Mhm,
So our task now is to see, because our production will undoubtedly come down,
mhm, mhm,
but it will come down as we are adjusting the portfolio.
mhm,
So what will happen now? Seguela will start producing more. Diamba Sud will start to come in,
mhm.
right?
Yeah.
So if Diamba Sud can source, call it 100, 150,000 ounces annually, in that range, that's what
Mhm,
we would expect out of
mhm,
a new mine. 100 and 150,000 ounces. We still have to get there,
mhm,
but that's an expectation,
mhm,
you know. So my production right now with the three mines is 120, 130. Then Seguela expands 40,000 ounces. Let's say it takes us comfortably to 350, 360. And then the Amba Sud comes in, bumps me up again close to 500,000 ounces.
Perfect.
So I am comfortable that we have a path to support the mine, the company producing in the range of 400,000 to 500,000 ounces annually, but more importantly, with low cost
Yeah,
and long life of reserves.
yeah.
You see, Fortuna was Jochen producing close to 500,000 ounces, but
Mhm,
we didn't have all the features. We only had some of the features that our strategic plan calls for. And that is, we had the production, we had the cost, but not the life of reserves at every asset. So now I want to come back to over the coming, short, medium term strategic horizon with a portfolio that can support the 500,000 ounces. But when you open the hood and look at the assets, you see a decade in reserves or close to a decade.
mhm. Absolutely. One thing what I've found here in the Lindero mine in Argentina, you produced approximately 11-12% more tons you placed on the leach pad, but on the other side your gold grade went from 0.6 grams down to 0.55, and your production was also like, I would say 12-13% lower in the gold ounces. So what is the reason for that, and will that be better in the next quarters, or are we seeing shrinking grades?
We're achieving what you should expect out of Lindero is grade in the range of zero point 0.5 to zero point 0.6. It will move there,
Okay.
no? It
Mhm,
depends on where you are. Remember, Lindero is a large gold porphyry. It's low grade, it's predictable. We have close to 100 million tons
mhm,
in mineral reserves. So within that, the grade will oscillate between zero point 0.5, 0.55, 0.57,
mhm,
no, 0.52. It depends where you are in the mine plan. That grade will oscillate. So it's no surprise. We just came out of a very intensive capital phase. We expanded the leach pad, which allows us to place ore for leaching for the next decade at the Lindero mine. And what we're doing now, and I spoke briefly about this at the beginning of our conversation,
mhm,
is we are reactivating exploration
mhm,
in the nearby Arizaro porphyry. Arizaro is a second gold porphyry
mhm,
located 3 kilometers away from the Lindero mine, within our properties, within our permits, and we are drilling there right now. I'm gonna be there in June. We're excited about what we're seeing. I mean, we need to see assays back from the lab, but it's a big porphyry edifice, and with some luck, we can get some gold associated with the copper we're seeing. And yeah, but that's another big opportunity. We have not been prioritizing exploration at Arizaro or Lindero because we have in this mine we do have over a decade in reserves. That
mhm.
mine will be producing gold for 10 years.
Yeah.
So bringing year 12, 13, 14, 15, 16 has not been the priority. We've been trying to do that more in the mines that have 7, 8, 6 years in the life of reserves, right?
Mhm, absolutely. Also one question to Caylloma, because I saw there was no gold production in the first quarter. Was there a change in geology, or didn't it make sense? What was the reason for that?
Caylloma is not a gold mine at all.
Yeah.
Eventually, we come across gold zones, which
Mhm,
are very, uh, I would say, limited in extent.
mhm,
Uh, Caylloma is basically a polymetallic silver, lead, zinc mine. It's producing about 1 million ounces of silver annually, plus zinc and lead. No, zinc and lead are not insignificant. Uh, so zinc grade is about 4.5%, lead grade is about 3.5, 4%. So it is our smaller mine in the portfolio. But as I always say, Jochen, mines are big headaches. Big headaches. There is no headache-free mine, but if there is one that gets close to it, is this one. The
mhm,
management team does an excellent job day in, day out, and it's a mine that always generates free cash flow for the company. $8 million, $20 million, $25 million of free cash flow every year. So, you know, it's not our biggest mine, but it was our first mine, and it's one that is not a big distraction. It has, if I look at reserves and resources, we can think of a
mhm,
decade of mining,
mhm.
right? So we're happy with it in the portfolio.
Yeah, I mean, as long as it makes money, everything is fine. Very simple.
Very
So,
simple.
as we are already roughly 6 weeks in Q2, um, how was the quarter so far? Are you satisfied? No headaches?
No, no, no. The company is performing,
Mm,
and we talked about gold price. us realizing $2,800, $2,880 in Q1. This quarter, we're realizing $3,300, right? And we're keeping our costs steady.
Mhm,
That's what's important. I believe the investors.
mhm,
I think that, you know, investor, shareholder appetite or interests shift depending on where the market is. I don't know if you sense this also, Joachim, with your subscribers and the people you interact with, the investors in the sector. But what I see is that, let's say 3, 4 years ago, if you approached the investor saying that you were going to invest in growth and invest heavily in acquisitions, investor would say, no,
mhm.
I'm not interested.
Yeah, yeah,
No,
absolutely.
it's too risky,
Yeah,
too
yeah,
risky. No, 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 don't do that. It's too risky.
now
No, they
everybody
are
wants.
risk averse.
Yeah, yeah.
Now,
Sometimes you really have to jump into the cold water.
yeah.
Mm,
Then recently, investors were more, show me that you can make money with this price. Show me that quarter after quarter you can expand the margins of your business. Show me that.
mhm.
That was show me the money
Yeah,
attitude, I think,
exactly.
right?
Yeah, that's
So
right.
they started paying attention, but they wanted to see mining companies delivering
Mhm,
what matters most, free cash flow.
mhm,
And right now, I sense a different change now because they are not asking about the margins anymore. They're more focused on growth, like you say, M&A. How are you going to grow? No, and I believe that that signals that we're at a different stage in the market where investors are more focused on growth because growth brings ounces. And if
mhm,
prices continue to go high, those ounces, no matter what price you produce, they're going to generate some margin,
mhm,
right?
mhm,
So I think the message from me, because I've been through a couple of cycles already, I've been in this industry all my professional life and then some. No, I come from a mining family, as you know.
mhm.
Mining has always been part of dinner talk every evening.
Ha! Yes.
You see, I lived, I was very young,
Mhm,
but I remember the 80s and gold going to $800.
mhm,
You know, I,
mhm.
I, I remember that. That was part of dinner talk,
Yeah,
right?
yeah, definitely.
So I lived through all of these cycles. And I can say that the key here is for us who allocate capital
Mhm,
to don't lose sight of the fundamentals
mhm.
of any business. Let's
Absolutely.
not let's not lose sight of the fundamentals of because yeah, sometimes we get these expectations on higher and higher and higher prices and higher prices and you know this is a cyclical business.
Mhm,
And we all work for days like this. Don't get me wrong. I am loving it. Loving it, loving it, loving it. But I don't run the business
mhm,
thinking that prices are just going to get high. I need to run the business
mhm,
thinking of the day when price is correct because
mhm,
I am responsible with over 5,000 people and hundreds of thousands of communities where our mines are located. So those are my stakeholders. And of course, in the center of everything, my shareholders.
mhm, mhm.
But we cannot do a speculation running a mining company. Investors can speculate
Yeah,
in
that's right.
and out.
Sure.
We cannot. I cannot.
Mhm,
No.
definitely.
Uh, Mining is not like, oh, prices come down, just shut down the mine. And we were talking about the
This
big
is not
commitment.
how it works. Yeah.
This is not an
No,
apotheca, no, a
no,
pharmacy,
definitely not.
no. This is
Yeah,
not, you shut it down, no,
yeah, yeah. It's
no.
not like switch on, switch off.
Yeah,
Impossible.
no, 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 no. You impact people. So like we work in very sensitive social environments in remote locations, with underprivileged communities, with respect to basic things that we take for granted, no, like social services, work, employment, people with very little social mobility. We work in those environments. We're responsible. for or presence or activity, expectations, hopes, things that come with a mine being there. We cannot just turn it on and turn it off because it doesn't work like that, right?
Yeah, absolutely not. Well, super. So I would say the company is in perfect shape. Lots of yeah, interesting things coming up for sure. You have a super war chest, and so from that perspective, let's see what happens. And sounds like Q2 is also in plan or on the plan. And yeah, we look forward to talk then again with you. And I wish you well in New York.
And just on closing, I never seen Fortuna as strong as it is today with the treasury, which you mentioned, or plans or projects, and the quality of people that make up. I'm privileged to work with an A team of professionals across the jurisdictions that make Fortuna happen every day. And
Mhm.
Fortuna has never been as strong as it is today.
Mhm. Perfect. Super. That was a great final sentence. Jorge, thank you very much. I wish you well. And I would suggest that we talk soon, latest when Q1 is out.
Good to see you, Jochen.
Super good to see you. Thank you very much. All the best. Yeah, ladies and gentlemen, it was Jorge Ganoza, the CEO of Fortuna Mining. And you heard it. Things are in perfect shape. That's how we wanted it. And as he alluded to, Fortuna has never been in a better shape. I see it the same way. You should really check out this fantastic company. And no net debt. That's also very important for me. So they are super healthy. And yeah, they sold 2 mines. Now they are, yeah, seeking for more stuff. But with the Ambasud, there is also the next big thing coming up. And I have a very good feeling that we hear quite soon here something very positive. And yeah, make sure you have a look on this fantastic company. Thanks for watching us, and bye bye from Switzerland.